Yeah, so I think that you already know, as we discussed last week, today the session is for 3 hours, as we discuss and agree. Hope that you all are preparing to stay with me for 3 hours. In between, now it is 3:35, around 4:30, that we can have a little break for about 10 to 15 minutes, and then we can continue. So hope that you all know that we are going to have a session for 3 hours today onward, right? Okay, so let's start with the presentation. Let me go back to the slide. So you already know we were discussing about the operational structure of the central bank, and I mentioned that there are basically four clusters are there in order to meet the key objectives of the central banks. And we already discussed about the departments come under three clusters. So anyhow, I realized that in the detailed note that I have provided, I have highlighted here two departments come under the second cluster. The two departments are Resolution and Enforcement Department. The other one is Financial Consumer Relations Department. So in the note that I have provided, the details of these departments are not there. So what I can do is that I will provide you a supplementary note including the details relevant to these two departments, because we can observe that the activities of the Resolution and Enforcement Department were important, and also in the recent part that we saw, and you may have already heard probably that with respect to some of the non-bank financial institutions, where we heard some bad cases, right? That some companies were failed. So at that time, in order to protect the interest of the depositors, that there are some special mechanism have been implemented by the central bank. Basically, this department, Resolution and Enforcement Department, is carrying out all relevant activities in this regard. That there is a special mechanism in place which is called credit what it is called, deposit in insurance system is there. So, and also some resolution activities are also carried out by this department. So these are very important activities. Because why that we experienced some of the cases recently. So likewise, I thought that probably in the exam also sometimes that time to time we can see in the past papers it has been asked you to describe the activities of different type of departments. Probably at least that we can see in the last papers, at least two departments. Sometimes they have given the name of the department and ask what are the activities and how these activities are relating to the key objective of the central banks. Or sometimes that some of the activities have been given and ask what is the department which is carried out these activities likewise. So you better to familiar with the activities of this department. And also I already mentioned the next department that I have highlighted here, the Financial Consumer Relations Department. So in the note I haven't I have given the more information about this department as well. So I will provide some information because this department is the almost the new member of the central bank. Like it is very recently established department, and some special tasks have been given to this department. It is again important. So I think better to give have better have a good understanding. Okay, so that I am going to give you a supplementary note on these two departments. And I think we have to discuss only about 3 more departments under this topic. Those 3 departments are come under the last cluster, risk management. So what are those that we discuss about all these departments? Okay. So I think that we have to discuss about the Employees Provident Fund department as well. But already I remember that we have discussed under the agency functions of the central bank. I mentioned many things about this activity or the function relating to the Employees Provident Fund. Anyhow, that you better to have some more details about this department as well. Yeah, here I have mentioned some of the key activities of this department. So better to provide some background information to the department. So this department was established under the Employees Provident Fund Act, number 15, 1958. That according to that act, and also that the Monetary Board of the Central Bank of Sri Lanka, it has delegated the power to this special department, which is called the Employees Provident Fund Department, to carry out all the activities according to the Employees Provident Fund Act, number 15, 1958. Okay, so and also that basically the key responsibility of this department is to act as the custodian of this huge fund. The Employees Provident Fund is the largest superannuation fund in the country. As at end of 2020, the total value of the fund was rupees 2,824 billion, which is the largest fund in the country. So you can understand how much is the responsibility then. And also that according to that act I mentioned, that all other general administration work relating to the Employees Provident Fund is with the Commissioner General of the Labour. So always this department is having close relationship with that Commissioner General of Labour as well. And also that we can see, especially this department is responsible for 5 activities. The first one is that collection of member contributions is the first one. So I didn't mention that here. You can't see that. So better you have a note on this, that we can see the key functions of the department. There are 5 key functions. Collection of member contributions. You all know that if you are a member of the Employees Provident Fund, that you have a B card. There is a specific number, a unique number for each and every member of the fund, so that we can easily identify the member. We can there is a huge database as well. So that all the employers that they have to through the employers that employees has to provide their contribution. Normally, you know that part of the contribution is from the employer, the other part is from the employee's salary. So likewise, that all the employers that they have to send the contribution for the members to the EPF department. That's how it works. And also sometimes that some companies are not sending it, so there is a surcharge for that. So the responsibility of this department is to collect the contribution of the members and also surcharges from the employers. This is the first key function. The second one is maintenance of general accounts and member accounts. So two type of accounts are maintained by this department for the overall fund position and also the operations relating to the overall fund. There is a general account process is there, and also for all the individual members there are member accounts. So that is the accounting procedure. So these all accounts are maintained in this under this department. And the next one, the third one is crediting interest to member accounts. So that you know that on annual basis that based on the fund balance, that interest payment is this department has to credited that amount to the members account, and then the balance sheet for all of these individual accounts to be prepared and dispatched for the members, so that all the members that they have the right to know what is the balance plus interest of their individual accounts. So it is also there. And the fourth activity or the function is payment of benefits of beneficiaries and beneficiaries of the fund. So you know that there are some eligibility criteria for members to withdraw their withdraw their money from that fund after they retire. Sometimes that for the female members that after the marriage they can claim to have their money. They can withdraw their money, and there are some other under some other conditions also members can withdraw their money from the fund, right? So that at that time that this department has to observe whether that these members are fulfilling all the eligibility criteria to withdraw their money. So at that time these payments to be made by this department. Okay, and also the next thing is in addition to that, sometimes we can see that the beneficiaries or the members that they can obtain loan from banks. Basically the loans are provided as housing loans, right, for long-term basis long-term loans that the financial institutions that they provide housing loans based on the employees' provident fund balances, so that the balance in the fund of a member is like a security against the loan that they are obtaining from a financial institution. At that time, the role of the Employees Provident Fund Department is to provide all necessary documents or the certificate to that particular bank to certify that fund balance is available for this member, so that this department has to give the clearance for that purpose. And the next thing is very important thing again. The fifth activity is investment of surplus funds and so that it is the other one that that it is a huge fund. So if there is a surplus means that not in use, right? So that fund this department is not going to keep them idle. Instead, that the fund is invest in basically risk-free assets like government treasury bills and bonds. These funds are being utilized by the Employees Provident Fund Department to and accordingly that fund is actually using to make profits. Okay, so that the profit is actually used to operate the activities relating to maintain that fund. So even though this department is established in the central bank, all the expenditure or administration cost of this department is actually not incurred by the central bank, but by themselves. Means that based on the profits that they are generated, that they have to incur all the cost. Right. Likewise, this department is operated under the Central Bank of Sri Lanka. So you can see here some other related activities of the department. So at the same time they are doing those all activities inside this department, aware the public or the stakeholders of this fund about the operations, and also issue half yearly member counter statement. I already mentioned that part. Yeah, and the other thing is annual accounts to the monetary board, Ministry of Labor and Ministry of Finance, and publish the accounts in newspaper. As I mentioned, that the fund is under the custody of the central bank, but this fund belongs to the public, because to the members, so that it is the right of the public to know what is happening. So that's why that in order to maintain the transparency, that all the fund positions are time to time published in the newspaper. And the next one is settled defaulted housing loan installment, which means that I already told you that against the fund balances that members can obtain housing loan in case that they defaulted. At that time, that this department has to take actions to settle such defaulted housing loans using the respective members' fund balances. So accordingly, that they have to adjust all the accounts as well. And the next one is submit information to the Auditor General's department to conduct the external audit of the department and compilation of audit responses. So that it is an ongoing process that each and every year that they have to continuous process there, that accounting process. At the end of the year, all the accounts are audited by the Auditor General's department. And also submit and disseminate data and information to the stakeholders, which means not only about the overall fund positions. Time to time that members, they are calling and visiting the department asking different questions on their balances, whether their balances have been updated. Likewise, that daily basis many public requests are coming to this department. So there is a special desk also there for the public complaints and inquiries. So it is about the Employees Provident Fund. And the next one is Legal and Compliance Department. This department is actually providing support for all other departments of the central bank. So they provide legal input to the internal and external stakeholders on matters on national importance at the level of policy formulation and relating to strategic priorities, targets, including the operational activities of the central bank. So we already know that central bank has been established under the Monetary Law Act. And also that different departments that we already discussed about the bank supervision department, department of supervision of non-bank financial institutions, so that those departments are operate under the different acts. The Banking Act is there, Financial Act, the Business Act is there. Likewise, that different acts are there. For the Payment and Settlement Department also, there are some legal acts, and also sometimes that different type of legal regulations are there. So likewise, always we can see there is a legal and regulatory framework are in place, so that all the activities of the central bank should be compliant with those regulatory frameworks. So one of the responsibility of this department is to check the compliance of the operational activities of the departments of the central bank compared to the legal provisions available. So as an example, if any one of the department is going to submit a board paper to obtain approval for any of the policy measure or any other activity, first that board paper to be submitted to the this department, legal and compliance department, after having their observations only, that the particular department can forward it to the monetary board. Like always, that process is there in place. Ensure the contemporaneous of the legal and regulatory framework relating to the institutions licensed by the central bank by drafting new legislation. So I discuss with you that I think under the activities of the Bank Supervision Department, we saw that the Banking Act is under development, that it is in the process of developing. So in that respect also, this department has a very big role to play. So that department is there. It is actually the most relevant department, but always that they have to have the support of the legal and compliance department to do all necessary changes or the amendments to the existing acts. The other one is handling legislation filed for and against the central bank in order to safeguard its legal interests. So that is what I told you, that central bank is established under that specific act of Monetary Law Act. So that central bank is an independent institution. So in case that if there is any issue is there against the central bank, so at that time, to safeguard the legal interest of the central bank, this department has that responsibility. And also the next one is handling proceedings under the Right to Information Act. You all may have heard about the Right to Information Act. So that all the institutions that almost all the institutions in the country should be compliant with that act to provide all necessary information, and also all the languages like that. So that this department is responsible to handle all the proceedings under this act as well. So likewise, actually this department is come under the risk management cluster, but also we can understand their role as a supportive department for all the other departments of the central bank, right? And the final one is the financial intelligence unit. So regarding financial intelligence also, that we have discussed many things earlier. At the time they discuss about the functions of the central bank. But I think better to, here some of the activities that I have mentioned. I think that same activities that I have mentioned in the note as well. But I would like to add some more details based on the latest annual report of the central bank. So first, let's see what are the objectives of this department. Okay, so let me first. Hold on a minute. Okay, so here I think you can see the presentation yet, but so what are the objectives of this financial intelligence unit? Okay, so that the first one is to establish an effective anti-money laundering and combating the financing terrorism framework in Sri Lanka. So it is the the objective of establishing this unit in the central bank. This the special unit established in the central bank following the international guidelines for anti-money laundering and combating the financing of terrorism. We call AML and CFT, right? So in the presentation that you can see that I use the short forms. So AML is for anti-money laundering and CFT is for combating the financing of terrorism. So that this unit is established basically to establish this framework in the Sri Lanka. And this department is working with a close cooperation with the national and international authorities, law enforcement authorities, basically. Yeah. So, yeah, this department established in 2006 in Sri Lanka under the Financial Transactions and Reporting Act number 6 of 2006. It is called FTRA Act. Okay, so I saw in the past papers that they have asked about the function of this department as well, especially because nowadays we can see almost all the central banks around the world that they have given priority to establish and strengthen the framework against anti-money laundering and combating the financing terrorism. You know what are the reasons, right? So there are many cases, illegal activities are reported around the world. So it is kind of a threat for the monetary authorities as well, in order to ensure the stability of the overall financial system. So that's why it is kind of a threat for the stability of the financial system. So that's why most of the monetary authorities have given their focus on these regulatory frameworks. So that in Sri Lanka, the related act is that Financial Transactions Reporting Act number 6 of 2006. So the key functions are like that the main role of this unit is to act as a independent statutory authority. So this unit is kind of an independent statutory authority. So it acts as the lead institutions or the regulator with respect to the AML and CFT regulation in the country. So it is that. So yeah, when they are doing their operations, that all the major financial institution in the country and also non-financial business and professionals, you know, that especially the banks and other financial institutions, and sometimes some other non-financial businesses are also come under the coverage of their activities, because that this type of institution that they have to report their transactions to FIU. Because why? That FIU needs to make sure that all these transactions are comply with the international standards on AML and CFT. And there are some other regulations are also there. So the responsibility of this unit is to ensure that all the transactions are comply with the regulations. If there is any suspicious type of transactions are happening, that they have to take measures to first check what are those. First, they have to have some investigations by consulting the law enforcement authorities, and then they have to report. That's what their key functions. So we can see that first, in order to fulfill these responsibilities, first they have to collect all the information on financial transactions. When they receive all these informations, that they have to compile those information in order to detect any possible links to money laundering or any terrorist financing. Sometimes with recent terrorist attacks that we experience, we saw that this unit, they were really busy at that time, because it was reported many suspicious transactions had been happened at that time, relating to some terrorist financing and all. At that time, we saw that their contribution for the investigations carried out by the law enforcement authorities of the country. Likewise, we can see that they analyze that kind of suspicious financial transaction relating to some unlawful activities, and also that they have to disseminate such information, that after they analyze all these cases, that they have to provide those information to the relevant law enforcement authorities for investigation. At the same time, that some of the information, according to the international standards, that they have to provide or share with the international institutions as well. So it is about the financial intelligence unit, FIU. So that's how we introduce that department, FIU. Okay, so I think now, yeah, I think we have done with this topic, where we discuss about the operational structure of the central bank. So we discuss about key departments of the central banks. So we can see that those are the 4 clusters, and under each cluster, we saw what are the departments are there established in the central bank, and also we saw the key activities of all the key departments. Okay, as I mentioned, with respect to the 2 departments come under the second cluster, I will provide you more information. Okay, so we have done with this topic, so we can move into the next topic. Let me. Okay, so. Okay, hope that you can see the presentation. Can you all see the next topic? Or the topic for the day is the balance sheet of the central bank. Can you all see the presentation? Okay, thank you. Okay, so let's see what it is. So accountability and financial performance of the Central Bank of Sri Lanka in relation to the objectives. Okay, let's see. You can see that for the Central Bank of Sri Lanka also we have a balance sheet, like for any other financial institutions. Okay, so that in that balance sheet, it provides the description to all the financial flows associated with its operations. Some transactions are domestic transactions, some are foreign operations, right? But however, the central bank and other financial institutions cannot be compared directly on the basis of their profit and losses and capital. So although the central bank has a balance sheet, and in that balance sheet also you can see that the profit and losses are there, that you can identify that, but we cannot just compare the balance sheet of the central bank with other financial institutions or any other institutions. Let's see why. The central bank was established as the authority responsible for the administration, supervision, and regulation of the monetary, financial, and payments system of Sri Lanka under the Monetary Law Act. These all responsibilities that we have discussed already. Okay, and I have to mention that in the last papers, always the second question is on the balance sheet of the Central Bank of Sri Lanka. So that's why this topic is very, very important. When you review the past papers, that you can see always that one question is on this topic. So that's why you have to familiar with this topic. And also under this topic, actually I think that already IBSL has shared a document with you, the material with you with respect to the topic, but I have almost updated the presentation, so I'm going to share this new presentation with you all, so don't worry. Maybe you may have, I hope that you may have already received the document, but I have updated it, right? So you will receive this. I will ask IBSL to share this new document with you. Okay, so that as we discussed, that you know already what are the responsibilities. Those all responsibilities are statutory responsibilities, where by the Monetary Law Act, these responsibilities have been given to the central bank. The administration, supervision, and regulation of the monetary, financial, and payment system of the Sri Lanka. So, in accordance with the Act, the central bank is charged with the responsibility of securing the core objective of economic and price stability and financial system. So I don't know how many times I mentioned about the core objectives, right? So we cannot escape of it, because always all the functions are relating to the core objectives. So here also that we can see all the elements of the balance sheets also again relating to the objectives of the because that all the elements of the balance sheet is associated with the operations. So those operations are again related to the key objective of the central bank. That's how we can see the relationship. So that according to the Act, central bank is charged with the responsibility of securing the core objective of the economic and price stability and financial system stability. So because of that reason, that accountability for the central bank and the success of its operations would be the effectiveness of policies and operations leading towards the achievement of its core objectives. So this is actually the set of words stated in the annual report, that I have just used the same set of words here, right? So, but I will explain you. It says that not like any other institutions, you all know that central bank is a unique institution which have entrusted with some unique responsibilities. You already know what are the key responsibilities, right? So all the operations of the central bank is with the objective of achieving these key responsibilities of the central bank, right? So that effectiveness of its policies and operation leading towards the achievement of its core objectives. So that's why always that operations are not necessarily for the profitability. So that's not like other institutions, right, or other financial or the business entities, that central bank is not purely operate with the profit motivation. That central bank's objective is something else that you already know. It is a national level responsibility has been given to the central bank. These statutory objectives are the fundamental features that distinguish the central bank from any other entity, private or the public. So that's how we can separate out the central bank balance sheet from the other private or the public entities. Okay, so because why that the central bank operation should not necessarily for the purpose of profit. Okay, but it doesn't mean that always central bank should end up with a loss. It doesn't mean that. Accordingly, profitability-related approach, if adopted by the central bank, could result in the bank pursuing profit while compromising its core objective. Why? Let's see what it is. If the central bank is going to adopt a profitability approach, means that central bank try to generate profits instead of achieving its core objectives, what will happen? Right? If the central bank's motive is to generate profit, so the central bank has to compromise its objectives, since it has the unique ability to create its own profit. Why it says so? Because of the power that central bank is having, that sole authority which has been given to the central bank to print currency and also to implement the monetary policy. Under the monetary policy, that central bank can influence the interest rate, and also central bank has the authority to maintain the stability of the exchange rate, so that central bank can intervene to the exchange rate market as well, so that can change the exchange rate. Likewise, central bank has that sole authority to create its own profit by using those powers through the monetary policy activities or influencing the interest rate or the exchange rate, right? That possibility is there, but the central bank is not using that power to generate profit, but the sole objective is achieving the key objectives, the stability objectives. Okay, is therefore follows the central bank's objective of economic and price stability and financial system stability need to be distinguished and detached from the pure profitability objective. So that's why we have to differentiate that too. That profitability objective is not there, but instead of that, the key objectives, stability objectives are the key focus of the central bank. Okay, but as I told you, it doesn't mean that always because of the operations of the central bank is always going to end up with the loss. No, it is not like that. That's why that end part of this statement says, which should essentially be incidental or academic only. So that pure profitability objective, it can happen, should essentially be incidental. It can happen because of based on the nature of the operations of the central bank, but not with the profitability objective, but the stability objectives. Right? In this background, the central bank's financial statements records gain and losses or deficits in the implementation of its monetary policy operations. So you can see with respect to the monetary policy operation or the exchange rate management or issuing of currency, that in the balance sheet, the gains or the deficits always can change at the values as realized and hence. So issuing us currency at the values as realized and hence, that time to time that this operation that these operations, those are having values. So time to time the values of the interest or sometimes the exchange rates are changing. Accordingly, that uh, the values of the gains or the deficits can be changed, right? We are going to discuss in the latter part of the discussion. The financial performance as reported in these statements need to be interpreted and understood in that context. So not like in the other institutions, that central bank balance sheets, that we have to understand all the components of the balance sheets, assets or the liabilities, uh, in relation to the operations, right? associated with the monetary policy, exchange rate management, or issuing of currency. So basically, based on these activities, that asset side and liability sides are changing, so that we have to understand those changes in that respect. So you can see how the operations of the central bank or the policy measures of the central bank going to influence on these assets and liabilities, as well as these assets and liabilities, how the changes are going to be impact on the money supply of the economy. That's what basically you have to understand under this topic. Actually, we are going to discuss about the balance sheet, but we are not going to discuss about the accounting procedures and all, how we are going to add all the assets and all. That is not our focus, but to understand the operations of the central bank, how they are going to reflect in the balance sheets, and again, because of that, how it impact on the overall economy. That's what our focus is under this topic. The central bank is subject to an external audit by the Auditor General under the Monetary Law Act Section 42 and 43 because of the transparency objectives, right? So that you can see that all the legal provisions available in order to ensure that all the activities are transparent, and that in order to be more credible. The Auditor General in turn has obtained the service from a firm, Chartered Accounts, the external auditor. At present we are having the KPMG to carry out an audit under international standard of auditing to ensure compliance with the international financial reporting standards, so that all the accountability and financial performance of the central bank are again compliance with the international financial reporting standards. Okay, so the next one is that there are two committees have been established in the central bank relating to the accounts and the financial activities. The first one is Monetary Board Advisory Audit Committee, which is called AAC. This committee is a subcommittee of the Monetary Board. We already discussed about the monetary board, and also we discussed about some other committees as well regarding the objective of financial system stability and also the economic and price stability. We saw that there are different subcommittees are there. So likewise, for the accountability and financial performance also, there are two subcommittees. The first one is this AAC committee. It is again a subcommittee. So this committee advises the Monetary Board on policies and matters related to financial reporting, internal controls, internal audits, external audits, and any other matters assigned by the Monetary Board. So these are the purview of this committee. They have to give all the recommendation on the policies and matters relating to financial reporting, internal controls, internal audit, external audit, and other matters. So that all the recommendations are going through this committee to the Monetary Board. So this committee is chaired by an appointed member of the Monetary Board. We already discussed about the members of the Monetary Board, and I think that I mentioned the name of the current members of the Monetary Board. It is worth to remember. And also, in addition to that, the committee is comprised by other two members who are audit professionals from the industry, which means that external parties. So they are not in the central bank or the members of the Monetary Board, but the external professionals, two professionals. Okay. The next committee is the Board Risk Oversight Committee. This committee is again a subcommittee appointed by the Monetary Board. but the function or that responsibility given to this board risk oversight committee is different. Their responsibility is to oversee the overall risk management and compliance function of the central bank. So that you have to remember the difference between these two committees, basically based on the responsibilities given for each committee. So this committee is responsible to oversee the overall risk management and compliance function of the central bank through a formal delegation from monetary board. So that duties are delegated to this committee by the monetary board. So this committee is responsible for setting the board a strategy and policies for the risk management and compliance function of the central bank, ensuring a dedicated focus on risk management and compliance. So that basically it is about the risk management and compliance. But in the previous committee, they are focusing on the financial reporting, internal controls, and external audit and external audit. So these are the differences. So this committee, that BROC committee, is chaired by an appointed member of the monetary board again. So here also this committee chaired by an appointed member of the monetary board. Here also it is the same. And also two other members are there who are independent external experts with relevant expertise who have not been involved in the financial services sector for at least 1 year. That is the qualification. So that person should not involve in any other financial service sector. Cannot be a that he may be sometimes because he's a relevant with external experts, means that a person with a very long experiences, but at the time that he appointed to this committee, at least he should be not involved any financial service sector at least 1 year. That is what the qualification is. So these are the two committees. So now let's see what are the key elements in the central bank balance sheet. The central bank's financial statements record gains or losses in the implementation of its monetary policy operations. So this is kind of a simple definition that we can give for the central bank balance sheets. So the first sentences is like that, just defining what is the central bank balance sheet is. So the central bank's financial statement records gains and losses in the implementation of its monetary policy operations. So we did not discuss about the monetary policy operations yet, but in the upcoming lessons that we are going to discuss about the monetary policy operations, monetary policy tools, and the implications of monetary policy, so you can understand how the operations that operational impact of monetary policy on the balance sheet when we are going to discuss the monetary policy in detail. But anyhow, today also that I'm going to touch some of the parts of the monetary policy operations in order to have an idea how those operations are going to impact on the balance sheet. So the next one is the exchange rate management. So we didn't discuss it yet, right? Issuing of currency. So, you know, the central bank has given the sole authority to issue currency. Okay, so that you can see now what is the financial statement of the central bank, right? It contains all the records relating to the monetary policy operations, exchange rate management, and issuing of currency. So the next sentence says that the part 2 of the CBSL annual report contains accounts and operation of the CBSL in terms of section 35 of the Monetary Law Act. So here also you can see that It is a mandatory requirement for the central bank to publish the financial statement within 4 months after the end of each financial year. So central bank's financial year is ended uh, in end of December, 31st December is the end of the financial year. For some institutions that we know that it is the end of March, but in case of the central bank, it is from January to December. So it within 4 months after the end of each financial year, it is required to submit the annual report to the Ministry of Finance. So, including the central bank's financial statement. So, in that annual report, if you go and see in the annual report that e-copy is available in the central bank official website, you can see in the part 2 of the annual report, it contains the accounts and operation of the central bank. So in the first part that you can see the financial statement and also some details for each and every element of that statement in the part of the annual report, and then you can see all the operational activities of the central bank. So under the topic that we have just finished with, that operational structure, so we discuss about the different departments now. So that if you like to learn more about the activities of different departments, that you better to go and read the part 2 of the central bank annual report. After the financial statement parts that you can see, there is a detailed information are available about the all departments of the central bank. So anyhow, that the requirement is, according to the Monetary Law Act, within 4 months after the end of each financial year, that the annual report to be submitted to the Minister of Finance. Okay, so it is the requirement. And then the next thing is examination of each item in both sides of the balance sheet. So you know that in the balance sheet that liability and asset sides are there, two sides are there in the balance sheet. So here I have given a very simplified balance sheet of the central bank. I think it is no need to show you the overall balance sheet, that it is there in the central bank website. You go and see in the part 2 of the annual report, you can see there is a overall balance sheet is there in one page. So you can see that all the real numbers relevant to the liabilities and assets. So here that I have mentioned here the key elements, but in the real balance sheets that you can see, there are several sub-components are there. Here I have mentioned, I have taken into account only the key components of the balance sheet. But in the real balance sheet that you can see, there are different type of elements, sub-elements are there. So by examining the each items in both sides of the balance sheets help understand how the operations of the central bank can influence the money supply in the economy. So now I'm not going to show you how it is going to be impact on the money supply, but while we are discussing, you will see how this is going to be impact on the money supply. So basically that you can see here also that currency held by public is the key component in the liability side. Okay, so that if in case that central bank is going to issue currency into the circulation through the commercial banks, so it will increase the liability of the central bank, because it is a liability of the central bank. Okay, so that here you can see the key components, and in the past papers that I saw that sometimes it questions like what are the key components or the asset components of the central bank balance sheets. Like, so you can see that here also in the asset side, you can see advances to the commercial bank, credit to government, international reserves, and other assets. Those are come under the asset side. So here that I have given some brief introduction to the assets because it will be useful for you to answer the questions, right, in the paper. The foreign assets. So what are the foreign assets? Foreign deposits, foreign government securities, and gold held for balance of payment purposes. So we didn't discuss about the balance of payment here in this course, but hope that you have overall idea about the balance of payment which is called the BOP, right? So in the BOP or the balance of payment, it is again kind of an international accounting procedure where a nation is going to record all the transactions that they are having with the other nations. So all the inflows and outflows, currency inflows and outflows associated with trade or investments with other countries are recorded in the balance of payment. So there are different sub accounts are there. So the trade account is there, financial account is there, like that. Different sub accounts are there. So anyhow, under the foreign assets in the central bank balance sheet, under the asset side, one of the element is the foreign assets. So that if the central bank has some foreign deposits in other countries, so it is actually an asset of the central bank. Like in the same way, if you have any deposits in a bank, that it is your asset because it belongs to you. At any time that you can go and withdraw that money, it is your assets. So it is an asset for you if you have an account in a bank, deposit in a bank. It can be a saving deposits or the fixed deposit, that it is your asset. But for the bank, it is the liability. Okay, which means that why it is called liability, at the time that you are going to demand it, that bank, they have to give back your money. So it is a liability for the bank. So that's what the key or the fundamental thing that you have to understand when we are going to discuss about the assets and liabilities, how it is going to be an asset for you, how it is going to be a liability for you. Okay, like in the same way, let's say that an individual, let's say you have obtained a loan from a commercial bank, so that you are liable to pay it back. So it is a liability for you, but it is asset for the commercial bank. Why? Because that commercial bank is actually giving that money to you, right? In return, that they are going to have that money back plus interest. So it is an actually in the, if we are going to observe the commercial bank's balance sheet, all the loans that they are provided to the customers are reported in the asset side. All the deposits that they have received from customers are going to be recorded under the liability side. Okay, this is what the basic about the assets and liabilities. So here, that if we have deposits, that somewhere, that it is an asset for you, for me. Like in the same way that central banks have some foreign deposits, so it is a foreign assets. And also sometimes central bank can invest in foreign government securities. Always that central bank invest in free risk the instruments, basically the government securities. Okay, so that foreign assets, under the foreign assets that we can see, most of the time the central bank has invested in foreign government securities. So those the values are come under the asset side. And gold held for balance of payment purposes. And also the central bank has some golds under the reserves, right? So that it is also come under the foreign assets. So we can see that all the international reserves that it's sometimes in the balance of payment we can say some official reserves are also there, but here the international reserves mean all the reserves that under the custody of the central bank. So these are the components come under the foreign assets. And the other component is the government securities. Okay, here in this we can see credit to the government. Okay, so that how the central bank is give credit to the government by buying treasury bills. Basically, we can say that central bank is invest in short-term securities, free risk securities. So those are the T-bills. So that under the government securities or the credit to the government, that we can see the value of the treasury bills holding for open market operation to be carried out in the conduct of the monetary policy. So in order to conduct, at the time that we are going to discuss about the monetary policy, you can see one of the monetary policy tool is the open market operations. So that central bank can use that treasury bills to absorb access liquidity in the market by selling the treasury bills in the interbank operations, interbank call money market. So we can later we can discuss, but I just wanted to give you an idea because here it has mentioned that open market operation. So that these treasury bills holdings for open market operation to be carried out in the conduct of the policy, monetary policy. So time to time that central bank invest in the treasury bills basically on short-term basis. Because why only, especially in the treasury bills, because it is a risk-free assets, because that government is not going to be defaulted. That's what the belief is. Okay, so likewise that we can see most of the government securities are in the form of treasury bills. So it is also come under the assets because central bank has invest in treasury bills. Okay, so that central bank is holding these treasury bills, especially for the purpose of conducting open market operation under the monetary policy. So the next one is the advances. Advances mean the loans, provisional advances given up to 10% of the estimated government revenue to help financing government expenditure. So this is again the advances central banks provided to the government. So that normally people think that central bank can give loans to the government without having any limits, but there is a limit that you can see. The central bank can give provisional advances. The limit is actually the 10% of the estimated government revenue for the respective year. Okay, to help financing government expenditure. Okay, so here it should be the expenditure. Okay, so the next one is the loans to bank, the commercial banks here. Various type of now here that you can see here not only the commercial banks, sometimes that are the other banks also maybe there. Various type of refinance facilities lending for productive purposes. So the central bank is conducting some refinance loan scheme facilities. Under that loan facilities, what actually happening is central bank is giving some funds for the commercial banks to disperse those funds to the prospective borrowers, maybe aiming boost the activities of the MSME sector. Likewise, that special refinancing facilities are giving, focusing different sectors of the economy. Most probably that we can see such credit refinance facilities are given aiming MSME sector. So likewise, that if the central bank has given some funds refinance under the refinance facilities, if central bank has given some funds to the commercial bank, those are also come under the assets, because why? That banks are liable to repay those funds to the central banks. First, they have to use those funds to disperse loans to the customers. At the same time, based on the repayment periods and all, that the bank has to collect the repayments, the installment from the customers, and the bank has to repay. Even though the customers are not going to repay, that banks are liable to repay the refinance amount given by the central bank. So likewise, these amounts are also going to be recorded under the asset sides. And the next one is securities purchase under resale agreement. Loans granted to banks against government security to maintain interbank interest rate within the policy interest rate corridor under the monetary policy conduct. See, here also you can see that at the time we are going to discuss about the monetary policy. So we are going to discuss about the policy interest rate corridor. So in order to maintain the interest rates within the corridor, so we can see that central bank is going to intervene to the interbank call money market. So at that time also we can see central banks provide, because you know that commercial banks, at the time that we are going to discuss about the monetary policy, I will explain you how it is happening, but time being I'll tell that the commercial banks, yeah, but better to leave it later, but anyhow. So sometimes the commercial banks, that they have to, they are facing some liquidity problems, means that short-term liquidity shortages can be there. At the end of the day, some of the commercial banks can be ended up with surpluses of liquidity. Sometimes that some banks, they are having a shortage of liquidities. So the banks who are having a liquidity shortage, that they have to borrow money from the system. System means first they are going to have borrow from the surplus banks, right? So if the surplus banks are offering very higher rates, okay, than the policy rates offered by the central bank, we are going to discuss them in detail under the topic of the monetary policy, right? But now I just cannot skip this point. That's what why I try to explain you. You have to remember this, right? Because that time to time that central bank is giving short-term loans for the banks. Okay, short-term loan, right? Short-term loans to the banks to meet their liquidity problems. Okay, based on what? Purchasing the securities from these banks, which is called that a standard lending facility. Okay, a standard lending facility. Central bank is giving a facility for the commercial banks to meet their short-term liquidity problems. So under that, some securities, that the bank has to obtain the loan against the securities. So the bank, if they have securities, again, it can be government T-bills or some securities issued by the central bank. So they have to use those securities as the collateral, and they can come to the central bank to obtain short-term loans. So in that case, these security purchase under the resale agreements are also type of assets of the central bank. Here it is resale agreements means what? That this bank, right, that they are going to obtain a loan on short-term basis against those securities. So the very next day, sometimes that is a very short-term basis loans, so that the next day that central bank has to repurchase. So that it is called the resale agreement. You will understand the whole process after we discuss the monetary policy. Okay, anyhow, now you have to understand these are the components, key components come under the asset side of the central bank. So you can see advances to the commercial banks. So which means that as I told you that under the monetary policy operations, that in order to meet their short-term liquidity problems, commercial bank can have some advances from the central bank based on the securities. So that value of such securities, the value of these securities are assets for the central banks. Okay, credit to the government, here you saw. So see that the advances to the government, provisional advance given up to 10%. And also you can see some international reserves. We saw that foreign assets that the central bank can invest in foreign government securities, or sometimes that central bank can buy foreign exchange or gold. Those are the foreign assets. And some other assets means that central bank can invest in other securities as well. Okay, so these are the major assets. So let's go and see the liability side then. Okay, so what are the liabilities? So you can see here the major liabilities, foreign liabilities. So the payable to foreign financial institution, we can understand basically two components, Asian Clearing Union and IMF. So that clearing union means that for some that clearing purposes, there are some the networks that we are using. So for that purpose, we have to pay for that. Central bank has to pay for using those facilities. So that to pay the Asian clearing unions, and also sometimes to pay the interest and all to the IMF, and also sometimes not only the interest, the installment plus interest for the loans obtained. So those are come under the liabilities. Foreign liabilities mean that the central bank has to pay to the foreign financial institution. And deposits of commercial banks and other financial institutions. So that under the statutory reserve requirement, that commercial banks are depositing money with the central bank. So that these are actually a liability of the central bank. Deposits maintained by commercial bank under the reserve requirement. So we are going to discuss about the reserve requirement, which is very recently increased again with the tied up monetary policy very recently, after about I think more than 1 year. I think that after a long period of time that central bank tied to the monetary policy. Okay, so we are going to discuss later. It is probably will be questioned in your paper, because we can observe after a long period of time only central bank reverse its monetary policy very recently, because of the I think in the class also I mentioned that we can see there is a inflationary pressure is there. Now we can observe that, right? So with that, and also we can see because of the developments after the COVID affected cases in many other countries, some of the markets are now regaining. So and also we saw that we are still struggling to come out of this COVID pandemic, but some of the countries that they are successfully escaped, right? So that they started to regain the momentum. of their economic process. So accordingly, we can say that some improvements are there in the global context. So aligned with that, we can say sometimes that in the international market, some of the commodity prices will be risen. Okay, that's what we can expect at the moment. So accordingly, nationally, in domestically, at the domestic level also, that we observe some prices started to increase. So that central bank, we are going to discuss in detail after we discuss about the monetary policy topic, that we are going to discuss about the recent monetary policy measures. So we are going to compare what are the influences of the monetary policy and what are the underlying factors of changing monetary policy and all. At that time you will realize. Okay, so likewise that we can see here also, we were discussing about the reserve requirement. So there is one monetary policy tool which is called statutory reserve requirement. So under that, the commercial banks, that they have to, it is a compulsory requirement, statutory requirement, where they have to deposit part of their deposit liabilities with the central bank. Okay, so those are actually come under the liability side. Commercial banks deposit with the central bank. Not only the commercial banks, the primary dealers also have to have some deposit with the central bank, and the EPF as settlement balances. So these components are come under the liability side. And the next component is deposits of government and government entities. Deposits maintained at the CBSL as the official depository of the government and other government agency institutions. So that there is a department called Domestic Operations Department. In this department, the government and also other commercial banks are also maintaining their account. So that in those accounts, that the government and other government entities can maintain their deposits. Those are the official depositories. So that these are come under the liability of the central bank. So like in the same way that we are keeping our deposits with the commercial bank, it is a asset for us, but for the commercial bank, it is a liability. And the next component is the major component come under the liability, currency issued by the CBSL as the legal tender. So that sole authority of issuing currency is with the central bank. So that responsibility or the liability of all the issued currency are with the central bank. So that when we are going to have that currency in our hand, it is an asset for us, but as the whole issuing authority, that the central bank is having the liability for all the currency in circulation. The next component is securities sold under repurchase agreements. Engagement in government securities under monetary open market operation. So here I mention this loans granted to bank against government securities. Actually, this is the opposite of it. So when the central bank is going to provide a loan to the commercial bank against the government securities, that all the securities purchased by the central banks come under the asset side. Okay, so here you can see the opposite of it. Securities sold under the repurchase agreement. It is actually the opposite of this function. Why? Because sometimes that in order to absorb excess liquidity, the central bank has to sell securities to the commercial banks under the open market operations again. So at that time, all the value of the securities have been sold to the commercial banks, right? So that after the maturity, that central bank is liable to repurchase those securities. So it is come under the liability. So that's what are the key components of assets and liabilities that you can see in the central bank balance sheet. So now it is 4:59, so almost 5 o'clock. Shall we go for a break and start? Is that all right? Because I promised to, I agreed to give you a little break at 4:30. Sorry, I completely forgot. So shall we have a break? Shall we have a break? And after 15 minutes that we can start again. Is that okay? If you wish to have a break, or otherwise we can continue. Okay, so one is accepting the request. Okay, so okay, so now it is almost 5 o'clock, so we are meet up at 5:15. So we discuss about the major sources of assets and liabilities. So then we are going to discuss some more about the possible reasons of changing these liabilities or the assets, and also that we are going to discuss how they are going to be impact on the net profit of the central bank. So let's first see what are the major sources of income to the central bank and possible reasons for increasing the net profit. So this is also a very popular question that I saw in the last final papers. So the past papers. So it is I thought better to discuss it in the class in the form of a question. Okay, so now you know these are the assets and these are the liabilities. So based on the net positions of asset and liabilities, it basically determine the profits, right? So what are the major sources of income to the central bank and possible reasons for increasing the net profit? So let's see first what are the major sources of income. Assets in government securities. So we already discussed about under the assets that we saw that central bank can invest in government securities. So why the central bank is investing in government securities? Not only just to give funds for the government, but also central bank needs to have a portfolio of government securities in order to conduct the open market operation to carry it out in the conduct of monetary policy. In order to conduct the monetary policy in a situation where there is excess liquidity in the market, we know when there are more money supply than the adequate level of money supply, there can be inflationary pressure. So at that time, central bank take measures to absorb excess liquidity from the market. So how the central bank is going to do that? Central bank going to issue treasury bills to the commercial banks. So the commercial banks are going to purchase those treasury bills. That means that commercial bank has to purchase them, means that central bank can absorb those money out of the system. So likewise, that central bank can reduce the money supply. So that's why that always central bank is going to have some holdings of treasury bills. So likewise, when the central bank is going to have more and more government securities, so it will increase the assets of the central bank. So you have to remember that always usually central bank is invest in government securities on short-term basis, which means the treasury bills, not in the normal circumstances, not in the treasury bonds. So that the treasury bills are actually the maximum maturity of the treasury bills are 1 year, 12 months. So the treasury bonds maturity periods are longer than that. So basically, the central bank invests in the government securities because it is the instrument, investment instrument in the market, which is having the very low level of risk. Basically, we consider the government securities are having free risks, right? So normally we consider it as a free risk assets. So, and it is a one way that what are the major sources of income. So this is one of the major source of income. And then the loan granted to financial institutions. So standard lending facility is there for the commercial banks in order to meet their short-term liquidity problems. That standard lending facilities. So we are going to discuss, right, regarding the standard lending facility and deposit facility available for the commercial banks in order to meet, in order to manage their short-term liquidity positions, right? So later on you will understand the whole picture, but at the time that you better understand whatever the loans central bank are granted to the financial institutions, not only to the financial institutions, basically the commercial, licensed commercial banks and also the primary dealers can also be there. It is one type of the loan granted by the central bank. So as I already mentioned that it is going to be an asset for the central bank. So, and also in addition to that standard lending facility, there is another lending facility is available for the commercial bank, which is called the lender at last resort. So in some past papers, I saw that sometimes it's questioned, what is the lender at last resort? What is the function of it? I think under the function of the central bank, I mentioned in earlier sessions that one of the key function of the central bank is to act as the banker to the bankers. So at that time, I mentioned about the this as well, the facility given by the central bank for the commercial banks in case that commercial banks are not having securities, right? Under the standard lending facility, that the central bank is lending for the banks, Asian commercial banks, based on the securities. Normally, we know that when you are going to obtain a loan, it should be backed by security, because in case that you are going to be defaulted, there should be a mechanism in place to recover that the loan. Otherwise, that there is a loss for the institutions. Like in the same way, in case that commercial bank also need to have a fund facility from the central bank, that they have to take a short-term loan against the securities. In case if any commercial bank is losing or that they could not manage their assets and liabilities prudent manner, that sometimes that they may not have assets, means that securities to borrow against those securities. At that time, no any other institution is going to lend to that bank, or sometimes that they will provide support but at a very high rate, because that risk is higher. There is no security against that lending. So at that time, that central bank, as a banker to the banker, providing that service, which is called the lender at last resort, where even without having any securities, government securities to back the loan, but still that they can go and have funds from the central bank, basically for a long-term basis. But at that time, we can see that rate is high from the central bank also, because of that they have not, they could not manage their asset and liabilities of the bank. It is not a good sign of financial management of the bank. So there is a penalty. So under the monetary policy, that we can see there is a one tool which is called the bank rate. So for the lender at last resort, under this facility, that applicable rate is the bank rate, which is higher than the standing lending facility rate, because a standing lending facility is provided based on the securities provided by the commercial banks. So there is a securities, okay, so that the lending rate is somewhat lower than the lending rate or the bank rate applicable for the lender at last resort facility. That's what it means. Anyhow, central bank can increase the assets of the central bank by giving loans to the financial institution, even under the standing lending facility or as the lender at last resort. So the next one is foreign asset portfolio. So that international reserves also come under that, but remember that not all the reserves of the country, which are some under the official reserves, that we can see that some of the reserves are not under the central bank custodian with the government also. So that international reserves are come under the central bank. So that these reserves are, I already described in the class what are the form of, there are some, again some requirement is there, so that we cannot keep all the international reserves in the form of US dollars only, that there should be a diversification in the portfolio. So we can see that. So in case that central bank is going to buy more and more foreign currency from the domestic exchange rate market, so at that time foreign assets will be increased. So likewise that central bank assets are increasing. So increase in the income from foreign currency assets. So see that there are some other ways that the increase in income from foreign currency assets, interest income, so that the central bank is not going to keep all the international reserves also idle. The central bank is going to invest the foreign exchange also, right? So that in that time central bank can have profit in terms of interest income. So basically the central bank again here invest in risk-free assets, again in the foreign government securities, sovereigns, sovereign bond and all. So that we normally know, sometimes that you may have heard, the Sri Lankan government also issued sovereign bonds, which means that foreigners can invest in our government securities. Like in the same way, Central Bank of Sri Lanka also can invest in other countries' sovereign bonds. So these are the government securities. So it is risk-free assets. So basically, under the foreign currency investments that we can see, that in the foreign asset portfolio that we can see, these risk-free assets are there. And also gains from unrealized price revaluation and realized price changes, which means that, that this is how actually that central bank can increase the profit based on the assets. So we saw that what are the sources of assets or the income. By using those assets, by investing them, that central bank can increase the profit. Okay, if the central bank is invest in somewhere, that interest income is a profit. Okay, so that the next thing is that whatever the foreign currencies that we are holding, that we know that time to time price revaluations are going on, that price changes are happening. In case that any of the currency is going to be appreciated, okay, so that assets, the total value of the asset is increasing. So sometimes that these the price are not realized, which means that in the market that we can observe that the even let's say that we have some foreign assets, means that some other governments securities are there in the foreign assets portfolio. So at the time that the face value is in that currency, so at that time, that if that currency is that appreciating, which means that the face value of that asset is increasing. So that it is actually an unrealized price revaluation, which means that we know that whatever the assets that we have, that the value has been now increased. But in case that we are going to sell it, we can realize the price change at that time only. But time being that the prices of the assets can be changed, right? But it is going to be applicable in real sense when you are going to resell your assets in the market. Okay, these are the that unrealized price revaluations and realized price changes. When you are going to sell it back, only that you can realize the real price change, but until then that even you can see the price revaluation has been happened, but it is not in realized, means that but still that you can see that the profit can be increased because of these changes in the prices. The next one is reduction in the expenses. So that here it is the net profit. Net profit means that what means the net profits? The gain and the losses, that when you are going to match these two, that we will end up with the net profit. Okay, so that reduction in the expenses of the central bank, total expenses of foreign currency financial liabilities, which means that if we have any foreign currency liabilities, here we discuss about the liabilities, foreign liabilities. What are the foreign liabilities? Payable to foreign financial institution. In case that interest rates are decreasing or the foreign exchange revaluation will happen, so we can see some profits can be generated because of the reduction in expenses, total expenses of foreign currency financial liabilities, reduction in operating expenses, operational expenses and cost of inventory. This is not associated with the foreign currency and all, but if that the central bank can reduce the operational cost, the personal expenses and cost of inventory and all, also that there is a positive impact on the net profit, right? Likewise, that we can see the way where central bank can increase the net profit of the central bank. So it can be happen either way. By increasing the income, there is a positive impact on the profit, and also in the net profit, you can see even though that same amount of or the volume of the assets are there, but time to time that price changes can happen. Because of that, it can be some impact. Sometimes it can be a positive impact, sometimes there can be a negative impact, right? Let's say that we have some foreign assets or the foreign government securities, but the face value in a pound or something, that if the pound is going to be depreciating against our currency, normally that we calculate the value. Normally we use the cross currency rates, but you can understand, I think, the concept here. So whatever the foreign asset portfolio, the real value of the asset can be increased or decreased based on the price revaluation in the market. So when we are going to realize those price changes, there can be a plus or minus impact into the net profit. So that's how the profit can be changed. Okay, so I saw that this question has been asked in the past papers in 2-3 times. So the next one is, what are key factors to make losses in the balance sheet? So here we discuss about the way how increase the net profit. Here the opposite of it, loss from unrealized price revaluation, mark to market losses in foreign investment, especially the foreign bond. So that we discussed already the story where where we have invested in a foreign bond in case that face value of that foreign bond can be decreased because of uh, the price revaluation. So at that time we can see mark to market means that the market the you can mark the face value, remark the face value, so that the asset value can be declined. So the next one is investment in foreign securities are revalued and recognized as gain or loss from unrealized price revaluation. So now you know what is the unrealized price revaluation. This here the same case, investment in foreign securities. So that we can invest in foreign securities, they can be revalued and recognized as gain at that time or loss from unrealized price revaluation. So it is also the way that one we can understand to make losses in the balance sheet. And the next one is net foreign exchange revaluation. The foreign currency portfolio comprises of foreign currency assets held for foreign currency intervention purposes and for trading purposes. That we have net foreign exchange. Here in the first case, actually it is relating to the foreign investment. Okay, but here not the investment, but here the reserves, the net foreign exchange that we know we are in the reserves that we can see we have some foreign exchange in different forms, right? Not only the US dollars. I told you that it is a compulsory requirement for the central banks to keep foreign currency not in only one form of US dollars, but different other forms, that yen, pounds, likewise. So it depends on basically what type of foreign currencies that we are holding. It is basically depend on the volume of transactions that we are having with different nations. Okay, so that sometimes it is worth to keep some yens with us if we are having more and more trade relationship with that country, like that. Okay, so that net foreign currency revaluation means that foreign currency portfolio, there are foreign currency assets are there. Why we are keeping those foreign currencies without investing them anywhere? We are keeping currency in the, because that currency is having more liquidity than that other type of financial instruments, bond or securities. So stock or anything that we know that that currency is that it is having more, it is the most liquidate asset. So because why we are holding in order to intervene in the domestic foreign exchange market. Right? You know that there is a responsibility for the central bank to if there is a higher fluctuation in the exchange rate, at that time central bank has to intervene to the foreign exchange market and take necessary actions, either to absorb foreign exchange or to supply foreign exchange to mitigate such variations, high fluctuations. Okay, so for that purpose, and also time to time that the trading purposes are there to pay the trade bills and all, that central bank needs to keep foreign currency assets, right? But what will happen that there can be foreign currency losses due to the changes in domestic currency against some foreign currencies relating to foreign assets, which means what? That time to time that our currency can be appreciate or depreciate. In case that our currency is appreciating means what? That the value of the foreign currency is decreasing. So we can see the impact on the balance sheet then, right? So we have our assets in the form of foreign exchange. So when the the foreign exchange value is going to be deteriorated against the domestic currency, so it will be impact on losses in the balance sheet. Okay, so other reasons: interest payments on securities relating to repurchase agreement held to absorb excess liquidity from the domestic market. So before that, I want to mention one more thing, that now you have to have an understanding about that devaluation and that appreciation and depreciation. Okay, if the foreign currency is appreciating means what? Which means that our currency is depreciating, right? Here that let's see this sentence again. Foreign exchange losses due to changes in the domestic currency against some foreign currencies relating to the foreign assets. So we are keeping foreign assets in the form of foreign exchange. So at that time, against the domestic currency, if the foreign exchange, or the, let's say that US dollar, it is very difficult to believe that, right? In the current environment, we cannot even think of depreciation of the value of the US dollars against the rupees. But let's say that any other currency, then let's say that that currency's value is going to be depreciated against the domestic currency, which means that you have to understand that what will happen, that overall value of the currency is now decreasing in case that we are going to convert the value of that foreign exchange to rupee, that we can see that value has been decreased now. Okay, likewise that we can see it can make a loss in the balance sheet. Okay, so the other reasons. So what are the other reasons? Interest payments on securities relating to repurchase agreement held to absorb excess liquidity from the domestic market. It is also a loss. Why? That you know that so that already I mentioned you, under the open market operations, central bank can use government securities to absorb excess liquidity in the market. If there is the excess liquidity in the market, which means that the money supply is higher than the optimal level of money supply. So at that time, in order to absorb the excess liquidity from the market, the central bank is implement the monetary policy. So the instrument used is the open market operation. So under the open market operation, central bank can issue securities. So the banks are going to purchase. Okay, banks are going to purchase them. So that this money is money, that excess money is coming back to the central banks. So likewise, central bank can reduce the money supply. So, but the cost here, or the loss here for the central bank is to implement the open market operation, that central bank is going to sell the securities, but at the time those securities are going to be realized, that central bank has to pay the interest. Okay, so that the banks are going to sell their securities now. Okay, so sorry, the other way, central bank is going to sell securities to the commercial banks. Okay, so like that. Okay, so that central bank is going to obtain money from the commercial banks. At the time that securities are going to be matured, that central bank has to purchase them back. Okay, so purchase them back, purchase those securities back. But at that time, central bank has to pay interest for those securities. Those interest payments are a loss. So this is one of the loss that we can see in the balance sheet. So now you can understand there is a cost of implementing the monetary policy, that you can see how the cost involved in operating the monetary policy. Okay, mark-to-market losses on foreign currency swap agreements used to boost foreign reserves. So nowadays that currency swap arrangements are very popular topic in the country. Or you may have heard about some of the swap arrangement that recently happened, and also that there are some more arrangements are there. Hopefully in the future that we are going to have currency swap arrangements with some other countries as well. This is not the time to discuss, but in the later part of our discussions, that not today, but later, that we can discuss about, especially regarding the matter that or the issue that we are currently facing. So at that time we can discuss more about these arrangements. So here the other kind of a loss for the central bank, when central bank is having foreign currencies of arrangements, why we need to have such arrangements when we are not have enough foreign reserves. So like today we are in a very bad position with respect to the foreign reserves. So at that time, in order to increase the foreign reserves, that we can have a kind of arrangement or the agreement with another country that they are going to give us some foreign reserve. It's a kind of a loan. So at the time, after the period of agreed time, that we have to give them back that currency. It is a swap agreement where at the time that we have to prepay that currency. If our currency has been depreciated against that currency, what will happen? There is a big loss at that time. Okay, that's what you have to understand. Mark the market losses means at the time that we have to pay back because of that exchange rate differences. Sometimes that we have to pay more than the amount that we have obtained at the time, so that it is going to be a loss. So it also can be recorded as a loss in the balance sheet. So there is a negative impact on the balance sheet. Okay, so the next thing is how distribute the profits of the central bank. So now our focus is going to be turn into the other aspects of the balance sheets. Okay, so far we have discussed about the components of the balance sheets, and also how that changes can happen to increase the profit or increase the losses in the bank. Okay, now we are going to discuss about the way that how central bank distribute the profit of the central bank. So I think at the initial level of the discussion, at the time that we discussed about the establishment of the central bank, I told you to establish the central bank, that initial capital has been provided by the government. Okay, but it doesn't mean that all the profits of the central bank should be transferred to the government. Okay, that's what you have to remember. Keep in mind that sometimes that in some questions it has been asked in that form, that it is like the initial capital or the seed capital which has been provided by the government to establish the central bank. Based on that capital, central bank is operating, and time being that central bank has been established well and now making profits, right? But I told you that central bank is not operated with the profit motives, but you can see even though the central bank operates with the pure objective of achieving the key responsibilities given to the central bank, that incidentally that profit can be generated. Okay, so now we are going to discuss about how the central bank utilize that profits. Okay, so Here you can understand now. Within 30 days of the end of each financial year, you know, when is the end of financial year? Means the end of the year, 31st December. Within 30 days after end of each year, central bank has to calculate the net profit. So that we saw a simplified version of the balance sheet of the central bank. So after we compile these all, that central bank can calculate the net profit. So that so within 30 days central bank has to calculate that net profit. So then what have to do? Okay, the central bank should not transfer the entire amount of profit to the government. Okay, but instead, as guided by the section 39 of the MLA. So now you can see that all the activities are comply with the legal provisions given by the Monetary Law Act. So section 39 of the MLA, before the expiration of 60 days, after the end of each financial year, okay, the monetary board shall distribute net profit as follows. So we know after end of the financial year, within 30 days, that central bank has to calculate the net profit. Then, okay, then within 60 days, okay, before the expiration of 60 days, that central bank has to what to do? That central bank has to distribute the profit in a particular manner, right? See what is the manner. First, all the net profit of the central bank shall be used to reduce the monetary adjustment account until the account has been completely liquidated. So it is the first requirement. So that all the net profit is used to liquidate the monetary adjustment account completely. Okay, so then if there is any additional amount of profit is there, the second step is that, yeah, this sentence is little bit difficult to understand. So I try my best to make it simple. Okay, so any remaining amount, okay, after we liquidate that monetary adjustment account completely, if there is any remaining amount, it is going to be carried to surplus until such time as it is now going to take into the capital account, okay, to the capital account. So then what we'll do that there is then that we have to add some amount into the capital account based on what? Based on this, right? We can see in the balance sheet the total asset is there during that period. So in that total asset, that we have to get out of the value of total assets, that we are get out of the assets in gold and foreign currencies, right? Okay, the total assets, the value of the total assets other than the gold and foreign currencies, that we are going to take that value of the total assets out of the value of assets in gold and foreign currencies, and then we are going to take 15% of that amount, okay, equal to that 15% of the total asset without considering the assets in the gold and foreign currencies, that the central bank is going to use that profit to liquidate the capital account. That what is the second step? Okay, so I will tell again. You know the first step. First, the profit is going to be used to liquidate the monetary adjustment account completely, and then it is going to be carried forward to the next amount. The next account is the capital account. So that carried to surplus until the such time as the total capital account of the bank reach sum equal to at least. So that that profit is going to be added into the capital account. What is the limit? Actually, it is the 15% of the amount equal to the total assets, but not the all total asset without the assets in gold and foreign currencies. It is the second step. And the third step is any net profit remains, okay, after following that two steps, if there is any remaining profits, after consultation with Minister of Finance, either be applied in liquidation of any outstanding government obligation to the central bank or paid and credited to the consolidated fund of the government. So then after complete the second step only, that remaining profit is going to be transferred to the government. But before transferred to the consolidated fund of the government, first central bank consult the Minister of Finance and ask whether this profit can be first utilized to liquidate any outstanding government obligation. So because we know that time to time that government is obtaining advances from the central bank, we saw what are the conditions, right? So we see that, let's see the provisional advances that the central bank is giving provisional advances, no, but there is also again the limit for the government. But anyhow, in case that there are any outstanding obligations, that central bank first try to meet those obligations, that to settle down, first settle that such government obligations using the CBSL profits, because anyhow that profit is going to be transferred to the government. But it depends on the decision of the Minister of Finance. So the Minister of Finance will request central banks either to liquidate any outstanding government obligation or to credit that amount to the consolidated fund of the government. So this is the procedure of distributing profits of the central banks. Okay, so here again that you can see in the, this is actually the real accounting process. Little bit difficult to understand the words, because that you are not much familiar with the accounts that operated by the central bank. But here the way that internally the profit distribution process is happening. So here you can see the real figures of the profits. So the profits for the year is this much. So from the first step is like that, transfer of exchange losses to IRR account according to the Monetary Law Act. Then there are some more adjustments are there for the profits, and then only there are different type of steps to be followed by the central bank before ended up with the amount credited to the consolidated fund. So this is the accounting process. But in short form in the exam, that I think if you question, if you have to answer how distribute the profits of the central bank, it is enough for you to explain in these words. But this is the real terms that we use according to the Monetary Law Act. Okay, in term of the Monetary Law Act and Monetary Board approved profit distribution policy of the CBSL, this distribution policy is effective from 2018. The following adjustments are made to the net profit for the year in order to arrive at the distributable profit. So that distributable profit is this. This is the distributable, that's here, distributable profit here. Okay, so that you can see some more adjustments are there before we can get the amount that we can credit it to the consolidated fund account. Okay, so here are the steps. First, fully remove the exchange gains and remove the exchange losses until the accumulated exchange gains are sufficient to absorb the losses. Charge any additional exchange losses. So here that it is very difficult to understand, because why that there are different accounts are involved in this process, where if there is a exchange rate, because we saw that time to time, because of that mark to market value, and also that price revaluation and all, that we can see sometimes exchange rate gains and losses are happening. So at that time, in order to mitigate such volatilities, right? So that here you can see, as per the profit distribution policy of the Cbsa, according to the new policy implemented in 2016, this is the procedure that the central bank has to apply. So here I have given these steps, because why sometimes it can be asked. Here I verify that thing. So what is the accounting policy relating to profits, losses arising from net assets or liability in gold or foreign currencies due to changes in the exchange rate? So this is what I have explained. I think that in this section you can understand it more clearly than try to understand this set of words. This is the way exactly reported in the annual report, the same words that I have extracted from the annual report, so that it is a bit difficult to understand, but you can see that why the reason that the central bank has to follow these steps in calculating the distributable profit, because otherwise that central bank can use the power of the central bank to manipulate the level of profits and all. That's why this procedure has been given here clearly, that all these steps should be followed by the central bank, because that we are not just going to apply all the exchange rate directly into the assets or liability side. Before that, we are going to put them into some separate account, and the net impact only we are going to record in the assets or the liability sides. That's what the overall meaning of this process. Okay, so anyway, that I know that this is a bit difficult to understand, but here you can see what is happening. That profit for the year, out of this total profits, that we have to less the amounts transfer of exchange rate, exchange losses to IRR. What is the IRR? International Reserve Revaluation Account. It is a separate account that the central bank is operating. So you will see why the reason is here. So that that any losses is there, that that loss is transferred to that special separate account, and then transfer of market to market gain of foreign asset to market revaluation reserve. So here again also you can see here the exchange rate losses, here the mark to market losses, which means that our assets can be the given that market to market, that value can be changed. So if accordingly that the value of the asset also can be changed. Okay, which means that that international sovereign bond that we can buy from one end and we can sell it at another end, right? Likewise, from market to market, the face value can be different. So such kind of gain or losses, again, that we have to transfer to another account. We are not just going to take it into the distributable profit. That's why we are going to less it. So that other accounting adjustments are also there. Transfer to the other comprehensive income as per the International Accounting Standards 90 employee benefit. Likewise, there are some adjustment to be done to the overall profit, and then only we can end up with the distributable profit as per the provisions given in the Monetary Law Act. Profit distribution policy of the bank and other adjustments, realized profit is this. So the realized profit is this. So it is the distributable profit. And then again, let's transfer to reserves as per the section 38 of the MLA, and then transfer of reserve of funding purposes of post-employment benefit plans, transfer to general reserves, recovery of outstanding GOSL obligations. We saw that before going to deduct that amount, that central bank is going to consult the Minister of Finance, that we saw. So, and then only we can decided what is the amount to be credited to the consolidated fund account. Okay, so this is the procedure of account. So you can see the real numbers here for year 2020. Now you know what is the see the real value here. You can see that it has been rounded into thousand, so that it is like how much is the value? It is billion, 6 billion, right? That trillion. So it is the amount. Okay, so then what is the monetary impact of the changes in the assets of the Cbsa? This is the most important part that you have to understand under this topic. Actually, this is what the core of this topic, I think. More than having the understand of calculating the profits and all, that you should understand what is the impact of changes in assets of the central bank. Okay, so there is the impact because we saw that in the asset side and the liability side, at the beginning I told you that these elements are directly relating to the operations of the central bank, so that there is a clear impact on the monetary sector of the economy. So changes in foreign assets and domestic assets lead to change in the base money supply. What it is, that base money, the reserve money. I think that I hope that you have learned about the basically the money, about the money and money supply, reserve money and all in the previous course. And also there is another subject, compulsory subject is there for you on the monetary policy. I think under that subject also that you may have learned about the money, so that you know that what is money. There is a base money, reserve money, M1, M2, like that you may have learned. But anyhow, that basically here you have to understand one thing, that in case that central bank is going to increase the foreign assets, okay, or the domestic assets, that you know that what are the foreign assets and the domestic assets. Let's say that central bank needs to increase the international reserves or the foreign exchange of the central bank. So at that time, central bank is going to buy foreign currency from the domestic exchange market. So at that time, the central bank is going to buy US dollars. How? Because central bank is to sell rupees. Okay, so that in order to buy US dollars, that central bank has to spend rupees. No? So likewise, that currency in circulation is going to be increased. Okay, so that is why base money is increasing. So that domestic assets means, what are the domestic assets? That especially the government securities. When central bank is going to buy securities, that central bank going to inject rupees or the currency into the circulation. So likewise, it will change the base money supply. The reserve money is increasing. The same way that if the central bank is going to sell assets, domestic assets, the other way will happen. Okay, and increase in net foreign assets, okay, lead to an expansion in the monetary base, vice versa, which means that in case that central bank's net foreign asset increase means, okay, that net foreign assets means that foreign assets minus foreign liabilities. In case that foreign asset increase means that monetary base is increasing, okay, as I explained earlier. Foreign assets increasing, which means that central bank is going to buy foreign exchange from the market. Okay, so that the same way, if the foreign liabilities are increasing means that in order to let's say that there is a high supply of foreign currency, no, the other way, that central bank is going to sell US dollars. Okay, if the domestic currency is highly depreciating, so at that time that central bank has to increase the supply of foreign exchange in the market, okay, in order to prevent the excess depreciation of the domestic currency. At that time that the liability is increasing. Okay, so that likewise that central banks increase in net foreign asset can be lead to an expansion in the monetary base. When central bank is increasing the assets, what will happen? That liabilities are increasing. At the time central bank is going to sell US dollars, that liabilities are decreasing. Like that, okay, you can see that there is an impact on the monetary base. An increase in net domestic assets minus domestic liabilities adjusted for the other items such as capital fund, international reserve revaluation, and likewise. So that you can see again there is an impact on the monetary base. Net domestic assets, what are the net dom assets? The domestic assets, basically the government securities. Okay, and also some capital funds. Their international reserve revaluation is also sometimes that we can see it also can impact on the change in the monetary base. So likewise, in case that asset side of the central bank balance sheet is going to be change mean, associated with that the liability sides, basically the currency in circulation, is also changing. So there is a impact, the monetary impact is there, can be increase or decrease the money supply. Okay, and then what is the cost in conducting the monetary policy? I already mentioned you what is the cost of conducting the monetary policy. But that central bank is not that much concerned about the cost involved in that conducting the monetary policy. The cost is not a major concern for a central bank in relation to conducting its monetary policy. The central bank incurs a cost in conducting its monetary policy. I already explained you, but why here it is not a concern of the central bank. We know that there is a cost for the central bank, but that you know that the objective of conducting the monetary policy is to achieve the key objective of economic and price stability. So that why that we need to have the economic and price stability in order to ensure the smooth operation of overall economic activity, so that we can see that that benefits, the ultimate benefits of maintaining a stability objectives are higher than the cost that central bank has to incur to implement the monetary policy. right? So that's why that central bank is not concerned much about the cost involved in conducting the monetary policy, because that ultimate results or the benefits is huge than that cost. So that's why central bank is not going to compromise that key objective based on the profit motive. Okay. So the absorption of the excess liquidity in the market for monetary stability, but where there is a higher inflation, we know that we have to control it. How? By implementing a tight monetary policy. Tight monetary policy is that the central bank is going to cut down the money supply. So the central bank has to absorb excess liquidity in the market. So that central bank conduct the monetary policy in order to do that, to decrease the money supply. So how central bank can do that? Central bank has to central bank has to issue government securities to the market, to the commercial bank. So the commercial bank is going to buy securities from the central bank, so that central bank can absorb excess liquidity in the market. So at the time that there is a cost, why that central bank has to pay interest for these securities at the maturity. This is actually the cost for the central bank. But central bank can control inflation by cutting down the money supply. That's what it means. So that here it says that absorption of the excess liquidity in the market for monetary stability involves payment on standing deposits of banks. So that standing deposits of bank means that I told you that according to the under the monetary policy operations, that central bank is going to issue securities, so the banks are going to deposit. Okay, and also that central bank encourage bank to deposit in the central bank, so that this money is not in the circulation but in the central bank, so that commercial bank cannot create bank money based on the reserve money. Okay, so likewise that and the primary dealers also can do the same thing. So and repurchase transaction with banks. So it involves what? A sterilization cost. Sterilization cost. Okay, sterilization cost means that that we are going to cut down the money supply. That the cost incurred is called that special word. Okay, sterilization cost. The sterilization cost of monetary operation is reported under interest expense in the income statement of the account. So in order to operate, in order to conduct that monetary policy, that you can see there is a cost for the central bank. What is the cost? Actually, the interest expenses. So that central bank has to pay interest for the commercial banks for these deposits of the commercial banks. So that this sterilization cost or the gain is composed of the interest expenses incurred on securities sold. So I told you that central banks sell securities. So for that also there is the interest expense. Interest expenses incurred on bond borrowing and interest expenses on SDF. So in case that central bank is going to borrow bonds, okay, so interest expenses on standing deposit facility netted off with the interest income earned on the securities purchased under the agreement to resale. So at the same time that you saw that there is the excess liquidity that central bank is to sell bonds. So at that time that central bank has to pay interest. At the same way, sometimes that when there is a liquidity issue in the market, central bank is going to buy bonds. So when central bank is going to buy bond, there is a interest income also there. So likewise, it is a two-way process. but ultimately that you are going to consider the net impact of it in the interest expense account, that we can see the net impact. But anyhow, that you can basically see there is a cost involved in this monetary policy, but it is not a major concern of the central bank. Why? That the responsibility of the central bank is to achieve the stability objectives. So in that case, even though there is a cost, uh, that cost is less than the benefits of the economy is having that stability. Because why it that stability, when there is a stability, it always what help or support the growth of the country. So we are going to discuss it in another topic. A separate, very short topic is there to see how the policies of the central bank is going to impact on the economic activities of the country. At that time, you will realize so why it is more and more important to maintain the key objectives or the stability of or to achieve the stability objectives by the central bank. Okay, so the next thing is central bank balance sheet. Still we are there. How CBSL maintain an adequate level Okay, so how central bank maintain an adequate level of capital to preserve the financial strength of the CBSL? You saw the time I explained you how the central bank is going to distribute profit. I told you there are three basic steps. There, see, you can see the way that central bank is distribute the profit. There are three steps. First and second, the steps are very, very important in that respect. Okay, so how central bank maintain an adequate level of capital to preserve the financial strength of the CBSL. After liquidating the monetary adjustment account, any remaining amount to be carried to surplus units such times as the account, the same thing that I have mentioned here. So you can see how the profit is used to liquidate the capital account of the central bank, so that it is the substantial account which is equal to at least 15% of the total assets of the bank after we get out of the assets in gold and foreign currencies. Okay, so this provision ensure the preservation of the financial strength of the CBSL, so that you can see that capital account is going to be more and more strong. So that's how that central bank is maintain an adequate level of capital. So that you know that that capital adequacy should be there. So it always show how much that any financial institution is strong. The position of the strongness of the financial institution. It is basically based on the capital. So why it is important to have that financial strength to the central bank? This is another question. So these all, I think these all questions that I have copied from the past papers. So it is the easy way that you can understand the aspects of the balance sheets other than just go and see all the elements of the balance sheet. This is the easy way that you can understand the relevant component relating to the balance sheet. Okay, what is the importance of having that financial strength to face any financial distress due to net operating losses and net valuation losses causing deterioration in the balance sheet. So now we already saw that what are the components of the balance sheet, that assets and liabilities are there. Now you can see relating to the operations, that this asset side and the balance side components can be changed time to time. And also in addition to that, valuation is also there, market to market valuation and exchange rate revaluation and all also there. So that even though that the volume of the assets remain unchanged, but the value can be changed time being. So that those are the risks. So that because of that, sometimes some financial distress will be there. So in order to face such distress, that always it is essential to have adequate capital. That's why it is important. Such losses would affect the efficiency and the continuity of the CBSL policy and actions. As an example, if that central bank is not having enough foreign reserves, okay, so that now we know what is the situation in the country, so that in case that our rupee is going to be depreciated continuously, but at that time, if the central bank is not having enough reserves of the US dollars, at that time there is no capacity for the central bank to intervene to the domestic foreign exchange market to help that or to stop it. Okay, so that it is one of the limitation then. And also sometimes we know that if we don't have enough, that if the central bank is not having enough securities, even though there are more and more liquidity, excess liquidity there in the market, that central bank cannot absorb such those liquidity from the market if that central bank cannot maintain adequate level of domestic assets in the asset side of the central bank. So likewise, that central bank cannot continue with its usual policy and other operations of the central bank. So it affects the function as the fiscal agent for the government and the responsibility to maintain an orderly settlement system. So that you know that even though sometimes that central bank has some obligations to pay the clearance charges for some international institutions and all. So in case that central bank cannot meet such obligations, that there is a credibility issue as well. CBSL cannot print money to cover losses as it conflicts with the goal of the monetary policy, and also government financial support may not also be appropriate as they involve transferring financial resources to the central bank. It also affects central bank independence and credibility. So other thing is, in case that central bank is having any financial distress, even though that authority is there for the central bank to print money, but in case that central bank is to use such newly printed money, it will impact on the, it will increase the money supply. So it is against the monetary policy. It can be conflict with the goal of the monetary policy at a time, particular time where central bank needs to maintain a tight monetary policy, but at that time, if there is no enough capital or the assets, that if central bank has to print money, means that issue currency, means that it go against the monetary policy what measures. So, and also, even though central bank have some support, fund support from the government, but it is again not a prudential measure, because why? Then central bank will lose the independence and also the credibility. Okay, in the worst case, weak financial strength could lead to insolvency of the central bank. So that there can be insolvency of the central bank if that financial position is going to be very, very weak. So this can be the consequences. Okay, what are the risks affecting its balance sheets? You know that this is common for any of the financial institutions. Credit risk, possible default by the borrowers such as government and financial institution. It is there. So that credit risk is that possible defaults of the borrowers by the borrowers. And liquidity risk, inability to sell certain financial assets to gain return. So sometimes we know that we invest in some instruments, bonds, but we cannot resell them, that there is a liquidity risk, because that when we invest in a long-term security bond, right, so that it is in case that you fail to sell it back, so you know that there is no enough, that that liquidity level of liquidity is less in the long term maturity bonds compared to the short term bonds. So likewise, that it is difficult for you to turn it into a liquid form, so that is the liquidity risk. And then the market risk, foreign exchange risk and interest rate risk, as well as other price risks such as changes in gold prices. So these are the market risks. So these risks are not unique, or it is a very common type of risk that any of the financial in the sector can encounter. Okay. And the last thing that we have to discuss on this topic is the central bank balance sheet. What are the accounting policy relating to the profit losses arising from net assets or liability in gold or foreign? I told you that this again linked with the way that central bank calculate the that here you remember that here I told you that distributable profit. So it is relating to that procedure of distributing the profit. So such profit or losses is not directly taken to the profit loss account of the central bank. So that any we discuss about the uh, changes in the exchange rate or the market values and all of those assets. So how under the accounting procedure, how the central bank is going to apply such profits or losses arising from net assets or liability in gold or foreign currencies. So we can see that the price revaluations and mark to market value and all are highly applicable with the foreign assets like gold or the foreign currencies. So according to the current practice, accounting practice, such profits or losses is not directly taken to the profit or loss of the central bank. Okay, if there is any let's say that we have some gold assets. So recently that we saw that in international market gold prices were highly increased. So at that time we can see there is a profit because that value of the gold now it has been increased. Okay, but at the same time that we can see the foreign currency is also the value against the rupees that it has been increased. Likewise, we can see that exchange rate changes and all, and also market revaluation of some assets. So instead taking them into the profit or loss directly, first those changes are transferred to the International Reserve Revaluation Account, which is called IRR account. And then the balance in that account, okay, so that then that overall balance of then that account is going to be take. Okay, so the balance in this account then report under the asset or liability as appropriate. Okay, that's what you have to understand. So here actually that's why these adjustments are here, you can see. So that any profit or loss that it is going to be transferred to the International Reserve Revaluation Account. Then the balance of that account is going to be indicated under assets or liability side of the central bank balance sheet in appropriate manner. If there is a negative IRR, which means that there is a net loss is there, so it is going to be recorded under the liability side of the balance sheet of the central bank. Okay, and if there is a positive in the IRR, balance is positive in the IRR account, which means that there is a net profit loss, right? So that it is going to be recorded under the asset side in the balance sheet of the central bank. This is the way it is reporting. Okay, so that this is the procedure, accounting procedure. Instead of taking these profit or losses into the direct profit losses of the central bank. Why that policy is there? What is the rationale behind that policy? To prevent money printing or reduce monetary impact due to bookkeeping profit arising from the exchange rate changes. So these all are actually the accounting bookkeeping practices, accounting standards. But because of that, that if there is a profit, the asset is increasing, so that the liability side also increasing, which means that the printing of money, there is an impact on the money supply. So as the central bank can influence the exchange rate, that you know that central bank has the authority or the power to maintain or no, implement the exchange rate policies. So that central bank can intervene to the foreign exchange market to buy or sell foreign exchange. By doing that, central bank can influence the exchange rate. So in case that, let's say that central bank let the exchange rate to appreciate, rupee to appreciate or rupee to depreciate, that there is a influence on the that exchange rate, it influences the real value of the assets in the balance sheet. So that's why. So the CBSL may have a bias to depreciate the exchange rate at the end of year to show such exchange profit, which will be a conflict of the interest as the CBSL has to conduct the exchange rate and other policies. So because of that power that central bank has to have, on changing the influence the exchange rate, let's say at the end of the year, central bank buyers to depreciate the exchange rate. Okay, which means that the rupee value is depreciating, but that foreign assets value is now increase. So likewise, that central bank can just accelerate the profit level of profit. Exchange profit is there. Okay, so that there can be some bad influence because of that, which will be a conflict of interest as the central bank has to conduct the exchange rate and others policies. So now we can see that that's why this special accounting process is there, policy is there. Okay, such profits or losses may create opposite assets and liabilities in opposite direction to the current monetary policy. So any profit that in case that central bank creates such in artificial manner, central bank can change the exchange rate to make it depreciate, and central bank can just show that there is a exchange profit is there. So such profits or losses that it can create opposite assets and liabilities in the opposite direction in the current monetary policy. So that it always going to go against the existing monetary policy. That's why this practice is there, policy practice is there. Here example has given, if there is a large profit due to depreciation of the exchange rate, such profit will lead to printing of money, which will further expand money policy in the country. So that in order to show that central bank is having more and more asset, that central bank can let the exchange rate to depreciate. How the central bank can do that? Central bank can do it, but what will happen then? That central bank will lead to printing of money, so it will further expand money supply in the country. So because of, in order to depreciate the exchange rate, that central bank has to buy more and more US dollars from the market. So in that sense, central bank has to supply more and more. money, so the printing of money. So it can expand the money supply in the country. So likewise, that we can see that the policy controversial is there. So this will be an opposite effect if the current monetary policy is a tight monetary policy. So now you can see why this practice is there, the accounting policy is there, why that IRR account is used by the central bank to first report any exchange rate profit or losses in that account, and only the net position of that account is going to be take as the liability or asset as appropriate. Okay, so this is about the accounting process relating to the central bank balance sheet. So this is what we have to basically discuss on this topic of the central bank balance sheet. So you better go and see the past papers and get ready. And you may sometimes see some other type of questions are also have been raised in this area, so that if you have any more questions that you can ask. So I think that we have already used 10 minutes, utilized more minutes, 10 minutes. So better to conclude the session here. Thank you so much for listening. So today we had a session for 3 hours. Thank you so much for listening. And if let's check whether you have any questions. No. So if you have any questions that you can even ask, right? You can excuse and ask while we are having the discussions, or even that the chat box is open for you all to raise any questions. But you know that online sessions are not always good. For some extent, it is convenient because we can participate in lectures while doing something else at home, but it is not always good because it is very difficult to have that active the connection in between the participants and the speaker. So in that sense, it's very I don't know, for me it is not good. But anyway, I ask you to raise any question if you have, and also I recommend you to read especially the press releases these days, that you know, because of the critical conditions prevailing in the country with respect to the financial and economic conditions of the country. So you can see time to time different measures are being taken by the central bank. So in line with those measures, that central bank is issuing press releases, so you can see and you can have all the updates. So you better to aware of such recent policy measures of the central banks that we can see in the past papers also. Normally that there are few questions on the policy measures. So very recently, as I told you, that monetary policy has been revised, which is a very significant change in the monetary policy after a long time. At the time that we faced the pandemic, at that time, that monetary policy was, released or the relaxed in a very considerable manner. So now started to tight again with the developments, not only the domestic reasons, but also considering some international reasons. So you better to read all the press releases, relevant press releases in the class also. When that related topic, under the related topic, that I expect to discuss some of the policy measures, but not all. So I recommend you to go and time to time check the central bank website if there is any new policy measures or any new press releases there, that you can see it is popping up, so you can go and read. And also there are some publications are there. Annual report is there. Recent economic development publication is there. These are the key publications that you can easily find more and more information relating to the topics that we are discussing under this subject. Okay, so I think, yeah, yeah. If you have no questions, that I think we can wind up the session here. Thank you so much. Good night to all. Let's meet again on next Sunday, or no, Saturday evening. Okay, thank you.